Hi, good morning. Bill Bodnar here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So here we are on a Friday, and the good news keeps rolling in. Gross domestic product for the first quarter of 2019. This is the first reading, so there will be two more readings coming, and so this number will be subject to revisions. However, it was a blowout. You can see here 3.2% for the quarter. Estimates were for 1.9, and we had folks on Wall Street thinking anywhere from 2 to 2.5. But no one was thinking something with a 3 handle. So this was a monster number. And so as you could imagine, stocks were lower in the pre-market, have now moved into positive territory. But all in all, I got to tell you what I'm excited about, mortgage bonds holding their own, actually up a little bit on a Friday, moving into the weekend. What I'm really encouraged about, look at this like classic bounce off the 50-day moving average. Price is literally the low tick back on Tuesday, moved higher, and here we are on a Friday closing at, hopefully the best levels of the week heading into the weekend. On a technical basis, in the Treasury market, we watched the 10-year note. Remarkably, resistance, we've talked about it over and over and over, 260. It was literally the high tick of the week, and here we are back now at 252 as we speak, heading into the weekend. So all in all, the bond market holding up in what is really again, that Goldilocks economy. Other numbers this week that we were really encouraged about, yesterday's durable goods orders. Durable goods are orders of goods that last 4 years and more. So these are significant purchases, obviously cars and airplanes, but also washers, dryers, refrigerators, big items. Strong number. It shows that there's a lot of confidence in the U.S. consumer, and with rising wages, this is going to accelerate. And so what will be interesting next week is what the Fed says. Next week is an enormous week. There's been a lot of complacency that we've been talking about where, rates have not been a threat. Inflation has not been a threat, and the Fed has not been a threat. But now that you start seeing 3.2 numbers on GDP, what will the Fed say next week? And so it will be interesting if they hold their dovish stance, which I'd like to think that they will, but maybe they kind of get off of it a little bit and kind of shake up the market. Or they just kind of hold the course. But right now, next week's a big one. We have PCE, we have ADP on Wednesday, we have the jobs report next Friday, and we have the Fed on Wednesday. So if there is a week to be dialed in and get your clients, ready to go and lock, it is certainly next week, because this complacency that we're seeing and we have been seeing in both stocks and bonds could change very, very quickly if numbers start to explode like this and the Fed starts to maybe react or signal that, maybe things are actually doing better. So right now, forget recession. There is no recession anywhere in sight. And so the Fed won't be talking about that. But what we could be talking about is this theme of the last few weeks, this re-acceleration of the U.S. economy. So, boy, when you're looking at this Goldilocks situation that we have in housing, we have all these great numbers, and we have rates staying at one-year lows. What a great story for the economy and anybody thinking about purchasing a home. So anyway, thank you for tuning in. We hope you have a great weekend. We'll be back at it soon. Bye for now.